This discussion of gold is for two reasons. One, get gold on the watch list. And in the premium video, I'll talk a little bit more about gold miners and maybe even metals and mining. But everything in those two groups starts with the underlying commodity, and in this case, gold. So I'm going to walk you through what I do with the tools on my screen, and then also take a step into how I choose which time frame to set up. Gang, I don't use multiple time frame in a way that I'm looking to confirm one time frame with another. I'm using multiple time frame comparison. Which one is the best time frame for the setup? Because that then dictates how long to expiration I would want my option to be able to hang in there for the, in this case, strength. So this is a swing trade. So I'm going to move the 5 minute, which is what I use for day trading, out of the way. And then we're going to take a look at the 1 hour on the left and the daily on the right. Now, we sent out an alert to members on Monday to buy the 21 February 252 calls. And the trigger was when GLD dropped to $252.68. Now, the reason I have the GC chart up here is because when I'm setting up anything that has an ETF of a futures contract, essentially, SPY for ES futures, or QQQ for NASDAQ, or GLD for GC, I want to look at the underlying commodity, which is usually trading 23 hours a day, not the 9:30 to 4 version. All right, that said, that was the trigger. And then today we're getting some nice follow through on GLD. The difference between buying when GC futures were sinking into support, right? And the difference between after a move higher, in which case a gap, we're sort of hoping it keeps going. I never want to have hope part of the trading plan, right? Either I've got something that has a probability of holding or I don't. Therefore, the confidence to buy on this down day, which was the 27th of January, as opposed to buying on the up day, that's the first big difference between exhaustion trading and momentum trading. The other thing here is, why not set this up on a 1 hour time frame? And what's the difference between setting it up on the 1 hour versus daily? If I set it up on the 1 hour, I could even play this Friday's expiration. I could even, look at maybe the 7 February. So I could look at 7 Feb. I can look at 31 Jan. I could look at something near term because I'm looking at a follow through of about 1 to 3 days plus, right? I'm not looking for a ton of time. So if I have 7 to 10 days to expiration, that's about all I would ever need on a 1 hour time frame. Okay. Now on the daily time frame, I'm going to be looking for a minimum of 2, but quite frankly, 10 days plus days to expiration. And if it's a trend on the daily, I might look for 14 to 21 days plus, because I don't want to put myself in a situation where the trade is still going and I'm running out of time. So this is where I didn't go any closer than 14 February or 21. And expiration dates are oftentimes a huge question that I get as far as, Rag, how do you choose which expiration date? And that's where I do want to mention, we're going to talk a lot more about this on February 5 at 8 p.m. You can register for the webinar coming up at simpletrading.com/consistency. And I'll be going through about 1.5 years of alerts in the Sector Secrets Mastery and different types of seasons that we have all traded through in an effort to continue with consistent account growth. All right. And that's going to be a really important webinar for those of you that are experiencing sort of the chutes and ladders version of P&L, where you have a bunch of little winners and one big loss evaporates 2, 3, 4, 5 winners and the account never grows, right? So if you're thinking, yeah, Rag, my account's not growing with a nice uptrend, I'm experiencing chutes and ladders, kind of the thrill of victory and the agony of defeat again and again, you definitely want to check out the webinar. So it's a daily time frame, gold entry. All right, now the other thing that we want to think about, and these are some interesting things that, again, you'll learn more about on the 5th, is a few basics that I don't know that everyone knows about things that we do in the Sector Secrets Mastery. Number one, I trade in a cash account, no margin, right? That is the easiest way to avoid the pattern day trading rule. Yeah, sure, there's all sorts of acrobatics traders attempt to avoid the pattern day trading rule, which is basically going to limit accounts under 25,000 to essentially 3 trades every 5 business days. That's very limiting. Forget day trading in that account, right? Some traders try to have multiple accounts, and how about just using a cash account? Which means all I'm doing is buying long calls and long puts, which is exactly what we did for gold. Why gold? Well, gold does not have an uptrend, but gold this week is a really good way to sort of avoid the volatility and the craziness of what's going on with this deep-seek narrative, the anarchy in tech, and waiting for some really good trends, say in maybe healthcare or financials, to pull back and give triggers. So in the meantime, gold is a really cool setup. We want to find strength. And the best way for me to find strength is either an uptrend, which I don't have right now because the second row is gray. Right? I do have bullish momentum, but I don't have an uptrend. But what I do have is at least 5 green candles. So I just kind of count back and ask myself 1, 2, 3, 4, 5. Once I have 5 candles, which obviously we've had for quite some time, at that point, I know, A, I want to be long calls, but probably more importantly, I'm not allowed to even buy puts, right? This is trend following without the trend. This is having a bullish environment without the trend and still having confidence for a directional bias, all right? So this is one of the things that we're doing right now, looking at gold. Now, as gold continues, and especially if you can organize into a trend, 2 sectors to watch that could coattail gold would be GDX, and you could even look at XME. This is metals and mining. And what we're going to focus on is where the strength is in those sectors. So is XME ready for prime time? Here's a really good comparison. XME is a hard no, but GDX, where the primary focus is not just any metals and mining stock, but gold related, look how it's coattailing that strength in gold. This is definitely going to be something to complement that overall approach to gold, to the long side. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.